Today is April 23rd, 2020, and in these unusual times, I thought it would be prudent to get an update on what is happening in the mortgage market, mortgage loan market. So I am Adrian Small from the Lux Dwelling Group at TTR Sotheby's International Realty, and I have the honor and privilege once again to have a conversation with Sebastian Rivera of MBB Mortgage. So let's just jump into the items. Without further ado, Sebastian, good morning.
Good morning to you. Thank you for having me.
So why don't we start with the lighter end of things? What can you tell us about rates today?
Perfect. Well, I'll categorize rates in three parts. The conforming, which are those below 510,000, the super conforming from 510 to 765, and the jumbos. So starting with the lower ones, the conforming ones, they're fantastic. We're in the low threes right now. It's a great time. Those have seen the most improvement over the last 2 weeks. The super conforming 510 to 765 are getting lower. They're not as low. We're looking in the mid to higher threes. And then the jumbos. The jumbos, as you know, most of the big jumbo investors have pulled out of the market temporarily. Those are more on a case-by-case basis. High threes, low fours, you can still get them for highly qualified individuals, but thankfully we still have them.
Now that you mentioned highly qualified individuals, just wanted to ask you, have some of the rules changed, like, their credit report levels and things like that?
Oh, absolutely. Minimum FICO scores have changed all across the board with VA loans, FHA loans, conventional loans, jumbo loans, the whole 9 yards. While we were used to able to do low credit score loans as low as 580 in some circumstances, the industry has seen a massive pullback. Minimum credit scores are 660 for some. Jumbo loans, you're looking at the 700s and up. Some banks have even pulled up as minimum credit scores of 720s now.
Wow. So let me go into something that I've been hearing a lot. We're on Zoom calls all the time, etc. And there's been a lot of talk lately about forbearances. Can you explain what these are and how they can have an effect or impact on our clients wanting to secure a loan?
Yeah, of course. So forbearance is basically grabbing a portion of the loan or the entire loan, the principal, the interest, and delaying it or deferring it to a later payment date. I've seen multiple banks will say, if you're affected by COVID, the next 3 payments will be due later, or some banks only grab the interest portion and tack it on to the total loan balance later. So it's deferring a part of your mortgage payment from now until a later date. Some people have decided to take advantage of this, even though they are not affected by COVID, and this has dire consequences when trying to apply for a loan. I just had a borrower with 2 loans that were in forbearance while she still had a job, and this severely affected her loan application because I can't get her a new loan until her outstanding loans are current. So being in forbearance will deter your possibility of qualifying for a new loan while you are in forbearance.
That's very, very helpful to know. And another thing that I was interested in getting an update, there have been a lot of changes in these unusual times regarding settlements and how settlements are taking place. What has to do specifically with the mortgage lender part of the settlement, are there any procedure changes that are taking place nowadays?
There are multiple procedure changes. One of the bigger ones from our side is a re-employment of verification 3 days prior to closing. While we would usually do this 10 days before, end of story, now we have to contact the employer within 3 days, verbally verify that they are still employed, that they have not been affected by COVID. That's one of them. An important one, which will also affect you, is drive-by appraisals are now allowed. Some banks, some investors don't allow it, while others do. VA is one of the more common ones that they do allow drive-by appraisals, but I have seen multiple banks push back and say, we want a full interior picture appraisal or we will not accept this value. Another one we've seen is tax transcripts. While they used to be required on all loans because the IRS is closed down right now, the tax transcript requirement is temporarily waived for all loans. So we have seen a lot of changes come through. And one of the bigger ones for self-employed individuals is to verify that they are still in business and still actively doing business. I had a recent example of somebody with a daycare wanting to do a cash out refinance. And through the process, we just discovered she went from having 18 children to having 1 right now. So needless to say, I don't have continuity of income, and this affects the qualification.
Absolutely. Are we still, are wet signatures still required at the settlement table on the buyer side?
Buyer side, all signatures are still required. Even though most banks are already set up for the e-signatures, most investors don't allow it.
Okay, that's good to know, because I've seen, like, this is in these unusual times, this is something that happens like every single day. We have changes with, e-notarization and
Yep.
things like that. So I just wanted to know where we were at on, do we still require, because I see, parking lot settlements and things like that. It's, I laugh, but, at least there's been interested and ingenuity on the part of some of the settlement companies to ensure that there is physical distancing, etc. So the parking lot closings are happening more only because of some of the requirements of wet signatures on documents.
And we have one of the investors that we currently work with does allow for e-signing at closing. The problem is that you compare those rates with the other rates, you're looking at a difference of 3.25 versus 5%. So
Yeah, there is
that's a hard sell.
there is a reason to get in your car and go to the parking lot.
Yes, there
Absolutely.
is.
So in our last conversation, we had spoken about your views for the next 6 to 12 months, and I wanted to get an update from you on that.
For sure. Last time we spoke a little bit about softening of the market. I'm still seeing it. I have a prime example, Fairfax County. I saw one of my clients loved the house. I was going for 502,000, got ratified under contract. The buyers lost their job or lost their income due to COVID, and it went back on the market for 3% less. So we are seeing some areas with some softening. There are other areas that are going to be resilient: Arlington, Alexandria, certain areas of DC. But there will be some great deals to be had coming up in the not so distant future. But those looking for bargains in the middle of Arlington, that's going to be a hard sell, especially in the 22207 zip code. I can't tell you how many calls I've gotten saying, we're going to wait for prices to drop down 20% to buy.
I doubt it, but it's interesting that you mentioned that, because as I do visit my database, call my friends, family, and clients to see how they're doing, and if I can provide them any additional assistance. I have found out that because of the fifth week that we're in this area of being hunkered down, the feeling is that V in the market is going to be quicker than expected. People are like, let's go back to doing business like we used to. So it is Adrian Small's view that, based on some conversations that I've had with past clients, that they're really looking into things be really ramping up, in the month of June and July, and some of my colleagues agree with me. And that doesn't necessarily mean that there will be a significant reduction in the sales price and this becoming a buyer's market. As you know, DC has the advantage or disadvantage, whichever way you want to look at it, to have low inventory. So we're still seeing in many cases, multiple offers in the DC market. Very well. So I so appreciate, Sebastian, you're coming to have this conversation with me today.
Thank you again.
I want to remind my viewers to click on the subscribe button and the little notification bell at the bottom, and please put your comments in the comments section. If you want me to have a further conversation with you, go ahead and click on the links that I'm putting within the description of this video. Thank you very much, Sebastian, and we will have another conversation in the future.
Sounds good. Have a wonderful day.
You too. Bye-bye.
Bye-bye.